Well, our first quarter earnings release this morning was in line with our expectations. We hit the bottom line number, and as you said, it might have been a little light, but boy, it was just a really small miss. Our business for the quarter met our expectations. We had 3 of our 4 segments deliver growth. And the other thing that we did was we reaffirmed our full year guidance, both for the top line and bottom line. So, I mean, we feel really good about the year, and it's the first quarter. So we expect 2019 to shape up the way we've planned.
Some disappointment around what your comments were on the call about JennieO turkey. Are you seeing weakness in that segment?
We have had some weakness there. You know, we, of course, were impacted earlier in the year with some cold weather. We also did have a couple of product recalls. But we're very optimistic about the business segment. We've got some great products in that portfolio that really resonate with consumers. We've seen great growth, and we're still very optimistic for the long-term growth of JennieO Turkey Store.
And Jim, in refrigerated foods, we saw some strength. What's your outlook there? And are you seeing quite a lot of pricing power and opportunity to increase the margins in the year ahead there?
Well, Wilfred, we've got so many great brands, and that's really important when you start thinking about pricing power. We've got 40 brands that are number 1 or number 2 in the categories in which they compete. We like to refer to them as our dream team of brands, and of course the captain of that team is Spam. But we do have pricing power, and when it's appropriate and necessary, we know that we have the ability to take pricing.
What about the Skippy peanut butter? Because you've had this big competitor with Jif, and it seems like there's this price competition where a lot of the big retailers are promoting their private label peanut butter. How are you responding, and how's it impacting that business?
Well, again, it's about the brand strength, and Skippy is an incredibly strong brand. We've actually seen really strong performance over the last 52 weeks. We've seen our share grow. And more importantly, we've also done a lot of innovating. So beyond just peanut butter in the jar, we've innovated in peanut butter snacking. We've most recently just launched Skippy PB&J Minis, which is a frozen entrance for peanut butter and jelly. So not only is the core business very sound, we're really pleased with the work that we're doing on the innovation side as well.
On Saito Sports, you revealed the price today that you sold it to Pepsi. I guess sort of recouping what you paid for it 4 or 5 years ago, even though the sales were lower. Was that a good exit for you?
It was. The business it's a great business. It's a great brand. We did everything that we said that we were going to do since we acquired the business. But over time, as we thought about our ability to control our destiny, Pepsi just has such strong distribution, and they've been a great distribution partner for that business. It just really made sense that they're the best long-term owner of the business. And so we were able to reach a transaction or a deal that was good for both parties. And we're really excited to see where they take it. But for us, it's just one of many strong brands. As I said earlier, 40 brands that are number 1 or number 2. So we certainly have plenty of brands to be able to deliver growth over the long term.
Jim, wanted to ask about the impact of the trade fight between the U.S. and China, the U.S. and other countries. Is it still having an impact on pork exports or beef exports and pricing? What are you seeing?
Yeah, it's had a little bit of an impact on our pork exports, which impacts our international division. It's also had an impact on steel and aluminum prices, which is an input cost for our grocery products business. On any given year, you're going to have headwinds or tailwinds, and it's just something that you have to overcome. And so although it'll have an impact, we still feel very confident that we're going to be able to overcome the impact of those tariffs. In China, our business is doing very, very well. We talked about that on the call this morning, how it's exceeding our expectations, and we expect that to continue for the balance of the year.
And finally, since you're at the Spam Museum there in your historical home in Minnesota, there's an article in the Washington Post this week that Spam is making a big comeback and is trendy at all sorts of Washington, D.C. restaurants. Is that true? What's driving that?
Well, we don't like to think it's making a comeback because we don't think it ever went away. But what I would tell you is, we just completed our fourth consecutive record year of Spam sales. And so we're seeing that domestically in the United States. We're seeing it around the globe. And it's exactly what you mentioned, Sarah, is, Spam is showing up on some of the trendiest restaurants from coast to coast. And, like I said, we don't think it ever went out of style, but we know that consumers are connecting with it in ways that they never have before. And that's really a great thing, because an 81-year-old brand that's had 4 consecutive years of record growth, I mean, that speaks volumes to our ability to drive our brands and drive our business over the long term.